This is Vic's Financial Strategy, and in this lecture, we're going to be going over a brief overview of the intro to trendline trading, how to use trendlines in your strategy, how to draw them correctly, and how to analyze trendline bounces or trendline breaks. Okay, so rule number one, the trendline has to have at least 3 touches. So what do I mean by that? If this is our trendline, we are looking for 1, 2, 3, or maybe a fourth. Fourth can be good, but we are looking for more than 3. Just a rule of thumb, why we do not look to draw trend lines based off of 2 bounces is because the third one can quickly get invalidated, and that wouldn't be much of a trend line to trade with. So we need at least 3 touches. Rule number 2, we need to see our trend lines see degrees of 15 to 30 degrees. So if I draw a 15-degree trend line right here, say this is a 15-degree angle, and this is a 30-degree angle, we do not want to see steep trend lines that range from like 45 degrees and higher. Why is that? They are going to get broken through a lot more frequently than these lower angles. That's just what I've seen, and that's what other traders are looking for as well. Okay, so rule number 3, we need to monitor the price action of trend lines as they are approached. What this means is that we are looking at the candle formations as the candles head towards the trend line and to see what they do at trend line, whether they break, whether they bounce, whether they come down quickly, whether they come to the trend line slowly. There's a number of reasons why this matters, and we'll get into that in just a second. But quickly, I want to look at how not to draw trend lines. Many beginners, when they start drawing out their first trend lines, they will draw everything under the sun and look for every trend and try to trade off of that. But honestly, I'm more of a simple guy. I like to look for simple trend lines that are a little bit more predictable and take a more basic approach to finding key entry points with better risk to reward. If I'm drawing out all these trend lines, I'm going to start taking trades here only to see it be approached at another trend line there. It just gets a little bit too complicated. But if I were to use these top 2 trend lines right here, this top one right here and this bottom one right here, these 2 bold ones, I think it would be a little bit more predictable if I'm taking entries here to sell here and not worrying about everything in between. Okay. And in this slide, we're going to talk about just the very basics of what trend lines look like on the bottom side and the top side. So on this green one, we have our bottom side trend line. We have more than 2 bounces, 1, 2, 3. Now we have a trend line set. Remember slide 1 and rule number 1, we need to have at least 2 bounces. Once we have our third, we can draw a trend line to see if it gets respected or broken in the future. Clearly we see it briefly gets broken and then briefly comes inside and then broken and then turned into resistance. Now talking about resistance, we are looking at this other trend line up here, this one in red. This will be our top side resistance trend lines. So the downward pressure trend line where price approaches, gets rejected, finds support, almost comes up, support, rejected here at level E, and then at F again, another rejection. Okay. And I really like this slide right here because this is a very basic look at how volume can affect a trendline break. So right here, we see that volume is pretty average as we're turning upwards. Volume first increases right here as the trend line is getting bought up. So if we expand up here, we see this candle right here has some high volume. It gets bid up. We're making new all-time highs. We make a little double top, and then we are testing the trend line once more. But if we look over here, we see that volume on this specific asset is very elevated and a lot higher. When you see a trendline break on elevated volume, expect more downside and expect that to be a very high risk to reward and a very good setup for a downside trade. All right, and in this picture right here, I want to talk about candle formations as a trend line is tested and broken. So after we have our 1, 2, 3 bounce, we're going to draw a trend line. On the fourth one, we see that it gets respected. But if we look closely at these candle formations, we see that some funny looking candles are starting to appear. We see that it doesn't break below, but it's having some trouble finding a direction. So once this candle wicks above and comes back down and closes green, I think we're still in a bull trend line. Obviously traders bid this one up and it gets tested. Right here is a prime example of a very bullish engulfing candle. The trend line gets tested. This second candle closes significantly higher than the previous candle. This is still bullish, but the second we see a candle like this big black one right here, this is a very, very telltale sign that the trend line is being broken and that we're looking for downside. And once you see a big candle like this, sometimes you can expect a retest on the trend line. And what I mean by that is that If we have this red trend line, boom, 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 acting as support, a retest is when the trend line acts as a resistance. So after we break in below the trend line, we come up and we retest. We're turning into resistance. We cannot break it, we fall below. Now we are looking bearish, we are looking for downside opportunities. So this is a prime example of something bullish turning bearish. And quite honestly, I love entering positions on the retest. I think the risk to reward on a retest is a lot greater than playing the breakout. I personally like to trade retests than breakouts because a breakout can be fake. I mean, we had a fake breakout right here. We quickly wicked below, say we wanted to go short. We started looking for downside opportunity only to close back in the trend line. So once we see a breakout, always look for a retest. Retests are great opportunities to get good entries with a very low risk to reward. All right, now let's flip our attention to the S&P 500. Let's actually draw a real trend line in the market and actually take a position or actually form a trade thesis based on trend lines only. Now, like I said, trend lines are only a tool that you can use for building a thesis on a trade. It is not the only thing you trade off of. It is only a tool for painting a clearer picture. Okay, so let's draw a trend line. We have our first touch, our second touch, and our third touch. Touch 1, touch 2, touch 3. All right, this trend line is being respected. Let's look at the fourth touch right now. This was about a couple weeks ago. We just had our fourth touch right here, right at 4,100. This was a pretty clean touch. 1, 2, 3, 4. And this is why we look at candle formations. We see a red candle, we close below, we head down, and we're looking for that retest. And today, as I'm filming this video, we just had a retest. And so when I flip over to the 4-hour candles, this is going to be a little bit more clear of what just happened. This was the retest that happened on December 1st. We traded down, we just got a retest, and we cannot break above. We end up rejecting and closing down here, and then our next candle was printed right here, below the trend line. Just looking at this from a trend line perspective, I think this is still rejecting, and I would look for downside opportunities only. I would not be looking for upside opportunities unless I saw the trend line turn into support. So what does that look like? A trend line turning into support would look like this. Price comes up to the trend line, it breaks, or let's just say it doesn't break, it rejects again, but then it breaks, then it retests, and then it goes back up. This is the only instance I would be looking for upside opportunity. But because we are closing below the trend line, we are only looking for downside. So I hope that gives you a basic understanding of trend lines, the understanding of bounces versus breaks versus support turning into resistance. All right, thank you so much for watching. Stay tuned for the next video.